If you purchase a vehicle and pay taxes in your state, you need to know this. Personal property taxes on vehicles are referred to as car tax. Why do I have to pay car taxes on my car? The easiest way to explain it is personal property are assets you own. Today we are going to be specifically discussing vehicles. Examples of motorized vehicles are cars, trucks, motorcycles, etc. Personal property taxes are required depending on the state in which you reside or live. Every state does not require you to pay personal property taxes. However, states like Virginia, Connecticut, Mississippi, Rhode Island are just a few of those states that do. In Virginia, we have something called Personal Property Tax Relief Act. Most of you know it as PPTRA. Personal Property Tax Relief provides relief for any qualifying passenger car, motorcycle, pickup, or panel truck having a registered gross weight with DMV, Division of Motor Vehicles, of 10,000 pounds or less on January 1st. This excludes vehicles used for businesses or commercial use. I'm going to break down how the city allocates those resources that it receives from the state in order to give the citizens a relief. Eligible vehicle values are assessed by the city. Let's just use an example of $14. The state provides an allocation of $9, which is the PPTRA relief for cities to use for the citizens' tax bills on their vehicles. The city takes that money and reduces citizens' tax bills, called tax relief funds, for eligible vehicles, which leaves a balance of, let's say, by example, $5 for citizens to pay the city when they get billed for their taxes on their vehicle. This may look a little complicated on the surface, but it's not. Let's look at the vehicles that are assessed under $20,000. Now, this goes for anybody, every state that is assessing personal property taxes on vehicles. How to calculate your taxes on a vehicle that's under $20,000. So, let's look at this assessment. You purchase a car. The cities go with NADA and JD Power to get the value of your vehicle. Let's say it's $12,000. Then you divide that by 100 based on the rate of your city, but we're going to use this as an example because it's an easier flow to follow. Then you divide that value by the vehicle. So you have, let's use $12,000, you divide it by 100, then you get 120. Then you multiply that by the tax rate in your city. You can look at the ordinance or the approved budget for property tax assessment. Let's just use $5. Now, PPTRA becomes into effect here because it's applied as a credit. So after you pay a vehicle for the value of $12,000, your personal property tax is going to be $600. Now, when you apply PPTRA, let's just make up 50% because it's easier. So you apply $600 is your tax bill. The city now allocates $300 of the PPTRA to you. Now your bill that you pay the city is $300. So you can adjust the PPTRA based on whatever the rate is that the city allocates to each bill. However, if you don't have PPTRA in a state that doesn't have PPTRA, you can still calculate your tax bill by knowing the value of your car, divide it by 100, and multiply it by whatever the rate is at your city or locality. You can take your last tax bill for your vehicle, try this, put it to the test, and see how it works for you. Also, PPTRA for Virginia phases out the more expensive your car gets. And most of the time you have to pay an additional fee for your licenses based on the weight of your vehicle. If you purchase a vehicle over $20,000, this is how you calculate your tax bill based on the assessment. Let's just say your car is valued at 61.5, divide that by 100. Now you have 615, multiply that by whatever the rate is with your city. I'm going to use an example of $5. Yours might be $1.30, $1.50, I don't know. But we're going to use $5 because that's on the higher end. This means that your tax bill will now be $3,000. Now, for those in Virginia trying to calculate what it would be if PPTRA is attached, don't forget, the city determines how much PPTRA percentage goes to you, and that happens during budget season. So pay attention during budget season to determine, and the city will then identify what the rate is going to be on personal property. So you take the first $20,000, divide that by 100. That's going to give you a rate. Multiply that times whatever your rate is, which could be 5. Now your personal property tax would be on that credit $1,000 or $1,000 on the first 20,000. Then you divide it by 50, 40, whatever the determination is for your county. And that amount is now applied. So you will now owe the $3,000 minus the relief is now your personal property tax final bill is $2,575. Again, these are just examples. The more expensive your car, the phase out will be for your PPTRA. So I would say if your car is over $20,000, it's going to be, your PPTRA is definitely going to be reduced. Now that you know how to calculate your personal property tax on your vehicle, please like, share, and subscribe to my YouTube channel, Mimi Digestible Government. Okay, have a great one. See you on the next one.